Hey, welcome back to the Hub channel. I have Jeff Beamer here with me again today. And Jeff, oh my gosh, I know you've had an amazing week this last week, some great trades, and we're going to get to those later in the show. But there's some headlines that are moving the market right now that I know you want to touch on. These headlines are obviously going to have a huge impact on our trades in this upcoming couple of days here. Jeff, what is going on?
Well, we'd like to think so, but right now, market, I think, really kind of anticipating what's going to happen with this week. Let's get to some of those headlines. First of all, we have the Fed. Fed policy is going to have their the Federal Reserve is going to have their policy meeting this week, and the general consensus is that markets they'll keep interest rates where they are, that they won't move up very much, if at any. Okay, so probably no rate hike this week. That's what's in the cards right now. Hence, the market had a very quiet trading day today. We'll get to the charts in just a moment. But then we also have a few other things going on. Possible government shutdown. We have, Republicans kind of talking about putting a proposal out there that we extend to the end of October. Democrats fighting back on that. Could that be a market mover? I think that could really be a market mover if government does shut down. I mean, that does cause a lot of problems with economic reports, especially. Any economic report the government provides will be delayed. So then we have the UAW strike going on. That could affect the automakers. And then an interesting one. We had the F-35 military aircraft had some mechanical trouble, and the pilot had to eject, and they're missing the plane. Now, I don't know that this one's going to be necessarily a market mover, but I don't know. It just made me giggle a little bit that, well, this plane is so advanced, they can't detect it by radar, and it's missing right now somewhere over South Carolina. So they put out a phone number. Have you seen our aircraft? And went to
How do
call
you?
that.
How does an F-35 go missing, Jeff?
I
I don't
mean,
know. Maybe that's above my
that's
pay
probably
grade,
not going to be a
obviously.
market mover, but I just, headlines, as far as headlines
No,
go, that was just too funny.
yeah,
But let's jump
always good
right
to
in
watch
and take a
that.
look at
Yeah.
the charts and see what's going on. We're going to start with the S&P 500 here, and we are really kind of struggling. We've been moving sideways, and as I mentioned at the top of the show here, we have a market that is really waiting for the Fed announcement. Okay, and so we've been stuck in this range here around 445, 450, up and down there, but let me put on a couple of studies here. Let me put on some moving averages first. As you can see, we're holding right at my short-term moving average, which is the 21 period. The other moving average is the 161. That's quite a ways away. But that could actually, if we do break down and we start to move lower, I did have a forecast of 430 on the spider. We got down near there a few weeks ago. 434 was our closing low, not quite to my 430. That could be coming back into play. Now, if I put on my hike and a sheet candles, these help me detect trend a little bit more. And what we have here are some candles that, well, they're what I call wicky up until the past 2 days. So I've zoomed in on the chart, and you can see these candles that clearly have wicks on the tops and the bottoms. When we get several consecutive days of candles like this, it indicates indecision. Now, most recently, these two candles are red and they have no wick on top. That's usually an indication of a trend starting in a certain direction, and this would be down. So we'll keep an eye on this to see if it does break this 440 level. Okay, if we break 440, then we might see the 430, 420 come into play. But for right now, markets are just waiting for the Fed. All right, same thing on NASDAQ. Okay, on the Qs, I left my hike and a sheet candles on. You can see a period, that in group of indecisive candles here. We're holding at 370. We could drop down to 360 and still be okay, but that break of 360 on the NASDAQ, and it's a long way down to find any technical support. All right. So we'll be watching closely to see how things go here. Tomorrow, we could have another quiet day. Wednesday, we have the Fed announcement. And as the Fed speaks, then we could have markets starting to move. The one sector, the one index that I am kind of making a trade on right now, and I put one on today, is on the IWM. Okay. The Russell is underperforming all, and we seem to be breaking down below this long-term moving average. We were being squeezed, as you see, by these two moving averages. And I'll take my Heikin off and go to a regular candle. All right, we are right now today at that last real area of support before dropping down to probably 175. Okay, that's only a 7-point move, but I put a trade. Our delta neutral service looks at delta neutral strategies that go sideways or slightly up or slightly down with certain types of strategies. And right now on IWM, I'm looking for that market to kind of tail off and sell off just a little bit, heading down towards that 180 level. So we took advantage of that today. Now, another headline is, of course, crude oil. And USO is our kind of proxy for US oil. Now, we did close, crude oil did close above $90. And you can see that USO trading at 81 is still part of that big bullish move up in crude oil prices. All right. I would anticipate crude oil going to 100, maybe even 110, 120. Got to get to 100 first. But that is a big move, and we could see USO going up to $90. Okay. Move up to 100 would be a stretch. Okay. But this is a nice big move. And if I put on those Heikin candles that help me determine trend, you can see here, if you look closely, all these green candles with no wicks on the bottom. That indicates a good, solid trend higher and moving on up. Okay. So $90, I think, might come into play. Obviously, 85 would be the first stop, and then 90. That would take crude oil to $100. And with our current energy policy, and with both Russia and the Saudis cutting back on production, we could still see this market gaining traction and moving higher. Okay. Now, going back to a couple of others here that we kind of keep our eye on. In addition to USO, we could look at XLE. Now, that one has paused out. There is a little difference between these two products. This is a select energy fund focusing on some of the producers, etc. It has been moving up as well, but has paused here at this 92.5 level. We'll keep an eye on that as energy prices are on the move. That is a sector to watch. Now, speaking of sectors to watch, last time we visited, we talked about the home builders and the fact that interest rates were jumping up. Let's see how home builders are doing. Well, they're in a little downtrend, and here they are at some significant support here. And again, this is holding on by its fingernails. Okay, if we break this $78 level, we could actually drop back down to 70. Okay, that $72.5 to $70 level on XHB, and that would take the home builders down with it. So, Brandon, we got a lot going on. In fact, let's take a look at our chart here on interest rates as well as mortgage rates. On the interest rates, we have the 3-month versus the 10-month interest rate yield curve here. Now, this is the one that the Federal Reserve looks at. Right now, the 3-month treasuries are 5.25%, 5.5%, while 10 years are around 4.3. So why on earth would you lock up your money for 10 years or more when you can get a better return on something that's just 3 months in duration. Okay, so that spread, as you can see, is what we call flattening, meaning the 10-year is slowly catching up to that shorter term, meaning the 3 month, but it is still inverted. And it's been inverted for a long period of time. In fact, this product has been inverted since October of last year. All right. And it usually is a 12 to 18 month, maybe even as long as 2 years precursor to recession. All right. So since this is still inverted, this is causing a big problem. Now, speaking of interest rates, well, we have the 30-year mortgage rates that have been pretty volatile here lately. Quite frankly, we jumped up hard up to 7.5 about 2 weeks ago, and then came screaming back down to about 710, 712, and now settling up at 7.25 on average. Now, this is as you can see, the basic trend is higher. And I will say, while 7% is not 3%, okay, it is still a affordable rate for many, many home buyers. It may be pricing out the very bottom entry level buyer, but compared to where we were in the 70s when we had double digit interest rates, 12, 13, 19%, we're a far cry from that right now. But we'll be keeping an eye on these sectors. We haven't brought up the 30-year mortgage in a couple of weeks, so I wanted to bring it up again, just show you that trend is in place and what that does to obviously mortgages and home builders and the whole process of real
Jeff,
estate.
that is
Yeah,
a ton of
Brandon.
info. I never thought I would see oil back at $100 this quickly. And yeah, I mean, that's going to put an impact on what our everyday, along with the market
Right.
itself. And so, but the home builders, obviously, I'm really interested in this sector. And I know we're going to keep talking about this, but this sector is something that I think is going to be one that we're going to be focused on for a while now. These things are going to be moving up and down, and it's going to be controlled by one, these mortgage rates, obviously, and then what the Fed has to say. So, what kind of stocks are we
Right.
looking at in this sector, the home builder stocks? Which ones are we watching this week?
Well, actually, one does have earnings announcements this week. And that happens to be, in fact, I don't think I put it on our list here, but that might be KBH. Um, KBH is KB Homes, sorry. And they do have earnings this week. So we might as well just be sure we watch them. Now, typically, in this program over the past 6-7 weeks, we've been talking about earnings events and trade stocks that break out. And quite frankly, I don't know if I'd put a straddle or a strangle on KB Homes because I don't know that it moves enough. Okay. Now, again, home builders are in a better place than multifamily, but they are being challenged by several things that I went through in our last show, which includes um, strategies that impact their margins, such as buying down interest rates, paying closing costs, etc. Those cut into a home builder's margins. So I would think that technically we have a stock that's pretty weak here, and I could see that these after earnings that this thing might drop down to 45. I don't know that earnings, even if they're blowout earnings to the positive, I think interest rates might still dominate. So I would look for maybe a move down. I wouldn't trade this until after the earnings event. Now, earnings come out, let's see, Thursday, pre market. We'll get to some other earnings here in a moment. But yeah, that's the one in the real estate sector of all the home builders that I would focus on right now because they're up to bat next, okay, as far as earnings go. So Brandon, yeah, there's several sectors, including these home builders and such, but these breakout trades that we've been talking about have been, man, just fantastic. And our new service that is available now is our Delta Neutral Breakout service, where I identify these stocks in advance and talk about what strategies to play ahead of time. Now we have this guide that's available, a free guide, almost kind of more like an ebook for you to download. And the address will be put on the screen here for you to download for absolutely free, and talks about how I go about not only finding these candidates, but how I place certain strategies to capture these anticipated moves. Now, as I mentioned, KBH, KB Homes may not be one that I would do this with. I don't know that it's going to move as much, but let's take a look at our last two trades where we actually killed it, okay, on this type of strategy. The first, I think we're going to show DocuSign, DOCU. Oh, we got Oracle up to bat first. All right, Oracle popping up here. Oracle was our really kind of our, I would call this more of almost a home run. It's definitely a triple, okay, when we get a over 100% return on a 2-day trade, okay? So Oracle had earnings last week, and we took advantage of a straddle. And as you can see, after the earnings event, this stock dropped over 15%. And when we closed out, we actually closed out a little better than what this graph shows. As you can see, the wick on the bottom of that candle from last week, we got off just above the lows. Okay, we printed lows, market started to rally back up. That's when we took our trade off. But had you missed that opportunity and didn't close out till the end of the day, as you can see on our debit of $697, this trade generated over $800 return and was our big winner of the past 2 weeks. Now, the previous week, okay, when we came to you, we talked about DocuSign. All right, DOCU is the symbol there. Now, on DocuSign, this stock, now here's the thing. Once earnings came out, and you can see that little triangle there in the chart, when earnings came out, the stock didn't really move very much. In fact, our debit on this trade was about $400. And after the earnings announcement, because of certain things that happen with options like implied volatility movements, etc., time decay, etc., those came into play, and we were down $300 on this particular trade. But had you subscribed to our alerts, I talked about hold on to your position. It was a bearish candle, and I think DocuSign is going to drop. And sure enough, it did. And we ended up making around a 40% return on risk. And you can see here, we took a little profit on this. All right. Our put debit went from $2.23 up to around $6 is where we exited, right around the $6 mark. Okay. Very nice profit. All we had to do was wait about 3 or 4 days post earnings. Okay. And then we have our exit that generated about 40% return on risk. So those are the two trades from the past 2 weeks that we took care of, and big profits on both of those. Now this week, we're watching really the automakers is where my focus is this week. In fact, let's get to the chart of earnings and what's ahead, because there's not much going on. The most notable this week and I don't have a breakout trade for you. For example, AutoZone, that happens before market open tomorrow, can be a mover, but believe it or not, that's a $2,300 stock. AutoZone is trading over $2,000. And it's a very expensive straddle or strangle if you want to play that one. And the stock would have to move like 30%, and it just doesn't. Now on Wednesday, obviously we have KB Homes. That's the one we're going to kind of watch. I think we might have a downward move on KB, but also FedEx. Okay, and FedEx is a stock to watch also, just because, on the good side, on the pro side for FedEx, they're picking up the slack from, I believe UPS is having some labor issues, and FedEx may be picking up business from UPS. But are people spending as much money in shipping? Okay, because of the recession, they're cutting back a little bit. Are they buying as much online? Are they buying as much from Amazon or eBay? Okay, so and finally, really the last one to watch, I would think, is Darden Restaurants. That's Thursday before market opens. Darden owns tons of popular restaurants, and we'll see if people are continuing to go out to eat or if they're staying home and fixing at home. So really, that takes us to our outlook and maybe what we'd be looking at this week. And as I mentioned before, I think it's going to be the automakers. And if we can pull my chart back up, let's take a look at a couple of these. We have Ford here. Okay. Now, Ford was down 2.2% today. Okay. And I think the automakers, depending on how long this UAW strike goes on right now, it's a selective strike. It's a strategic strike. They're only striking at a few plants. But if it begins to spread, meaning that would indicate that the leaders of the UAW are not near an agreement with the automakers, then we could see things happening. But the thing is that automakers are much better financially right now. They could weather this storm. So Ford, as you can see, it's been pretty quiet until recently, and it started to move a little bit. Now we have some labor struggle. And the other one is GM. Now, GM was down 1.8% today as well. But as you can see, it's pretty much just trading sideways right now. I would anticipate these stocks trading in a range for the next week or two while the UAW and the automaker executives meet at the bargaining table. All right. So with our Delta Neutral Trader service, our not the breakout, but our regular Delta Neutral Trader service, I show strategies to take advantage of these stocks that are moving sideways for extended periods of time. All right. And like GM here, there are strategies like calendar spreads, or maybe an iron condor or a butterfly, strategies that go sideways where we could possibly make money in a sideways strategy. So I would look at GM here as my focus for the next week or two, for the stock to continue to move sideways in advance of any agreement that comes out with the UAW. So Brandon, man, there's a lot of information we covered today. But the good news is people can stop and go back and re-listen if they really want to pick up on what we talked about. But two great trades, and now we're looking, instead of a breakout trade, we're looking for a stock to go sideways. How about that?
Well, we love that. And the point that we can make money even when a stock is going sideways is where you really shine, Jeff. And so that is just one more reason why you guys should go ahead and download that free guide Jeff talked about earlier. We are going to put the link in the description of this video, so you can go ahead and just click on that. It's going to be nice and easy for you. Thanks again, Jeff, for coming by. And as always, thanks again for crushing it. These last few weeks have been insane for you as winners. And if you guys are not already signed up and following Jeff and watching what he's doing, I can't help you. But anyway, thank you again so much for dropping by the channel today. And thank you guys for dropping by this channel. We really appreciate it. Please like and subscribe if you haven't already. And we'll see you in the next one. Here we go. Take care,
Take care.
guys.
Bye bye.